Hey everyone, welcome back to Corporate Decoder, the place where we break down corporate filings and help you understand what they actually mean before we dive into C.I.S.O Global's latest proxy statement. Let me tell you, this one has more proposals than a wedding reception, and some of them are pretty juicy. So grab your popcorn, because this is not your average shareholder meeting. Alright, first things first, this filing is from C.I.S.O Global Incorporated, and it is a pre-14 filing. That is basically a preliminary proxy statement, letting us know about their upcoming annual meeting of stockholders. Think of it as the invitation and the agenda for their big yearly shareholder get. Together, it tells us what they want to talk about and vote on. The big day is the 10th of December 2025 in Scottsdale, Arizona. And what is on the docket for this shareholder powwow? Well, it is a pretty packed agenda. They want to elect directors, which is pretty standard. But then it gets interesting. They're looking to ratify their independent accounting firm, which is also normal. But hold on to your hats, because proposals 3, 4, and 5 are where things get really spicy. They want to amend their 2023 equity incentive plan, basically giving themselves more stock to hand out. Then comes a proposal to authorize issuing shares that come from converting Series B preferred stock to B. Riley Principal Capital Incorporated. And perhaps the biggest kicker is a massive proposal to increase the authorized number of common stock shares from 300 million to a whopping 1,300 million. That is a 7-fold increase, folks. The rest of the document is a deep dive into all these proposals, explaining why they're needed and what they mean for you. The shareholder, they cover everything from executive compensation, corporate governance, and even security ownership. Now let's talk about voting. If you are a stockholder of record as of the 7th of November 2025, you get a say. You can vote in person or by mail, email, fax, or the ever-popular internet. And if you hold your shares in street name, meaning through a broker, you need to follow their instructions carefully. For any of these votes to count, they need a quorum. That means 1/3 of all the shares entitled to vote need to be present, either in person or by proxy. If they don't hit that number, nothing gets approved. Most of the proposals need a simple majority of the shares represented and voted at the meeting. However, for that huge authorized stock increase proposal, it is a majority of the votes cast. This distinction can be important if a lot of people abstain. Now, a crucial point for those holding shares in street name, brokers can generally vote on routine, matters if they don't receive instructions. But for important issues like electing directors or approving stock plans, they cannot vote your shares without your explicit direction. These are uninstructed shares and they count towards a quorum, but not for or against the non-routine proposals. So if you don't tell your broker how to vote on director elections or stock plans, your vote will not impact those outcomes. Let's talk directors. They're proposing 5 nominees, and it seems like a solid group of experienced individuals. We have David G. Gemmett, the CEO and chairman, with a background in cybersecurity and healthcare tech. Then there is Philip Balatzos, Mohsen Khorasani, Andrew Hancock's, and Andrew K. McCain. Many of these folks joined the board recently, implying some changes might be underway. What is notable is that while Mr. Gemmett is an employee director, the rest are considered independent. The executive team is led by CEO David G. Gemmett. Deborah L. Smith is the Chief Financial Officer, and Kyle J. Young is the Interim Chief Operating Officer. It looks like they are bringing in experience from companies like Beyond Trust Software, bringing that cybersecurity knowledge to C.I.S.O Global Incorporated. On the governance front, they have independent directors leading their audit, compensation, and nominating and corporate governance committees. This is good practice. They also have a code of ethics and business conduct, and they require executive sessions for independent directors, which is a healthy sign of checks and balances. The audit committee, made up of independent directors, has overseen the company's financial reporting. They met 5 times in 2024. They've reviewed the financials with management and their auditors, Semple Marshall and Cooper LLP. Now, let's peek at executive compensation for 2024. David G. Gemmett, the CEO, made about $340,000 in salary and other compensation. Deborah L. Smith and Kyle J. Young, the CFO and interim COO respectively, both made around $296,000. Interestingly, there are no stock awards or option awards listed for them in 2024 in these tables. However, looking at outstanding equity awards, Deborah L. Smith and Kyle J. Young do have some unexercised options outstanding. David G. Gemmett does not appear to have any outstanding equity awards listed as of the 31st of December 2024. This could mean a few things. Either they are not currently focused on stock-based compensation for the top brass, or they are waiting for shareholder approval on the upcoming plan amendment. For non-employee directors in 2024, the table initially shows no cash fees, stock awards, or option awards for most of them. However, there is a figure of $44,820 for Brett Chugg under option awards, and then it states these non-employee directors resigned in January 2025. This indicates a potential realignment in director compensation and composition. This is where we see the need for more shares. As of the 31st of December 2024, there were 1,523,691 securities to be issued upon exercise of outstanding options with a weighted average exercise price of $37.34. And critically, only 48,14330 securities remained available for future issuance under their approved equity compensation plans. This is why they need to increase the share pool. This is just a confirmation that all their officers and directors have filed their required ownership reports on time. Nothing too alarming here. Let's look at who owns what. As of the 29th of October 2025, David G. Gemmett holds a significant chunk, around 13.41%, largely through his entity Gemmett Enterprises Incorporated. When you combine all directors and executive officers, they collectively own about 14.42%. Gemmett Enterprises Incorporated itself holds about 12.83%. This shows management and insiders have a substantial stake in the company, which can be a good sign for alignment. Here they disclose any dealings between the company and its executives, directors, or major shareholders. Stephen Scott, a former director, is still providing consulting services for a monthly fee. They also have a managed services agreement with Hensley Beverage Company, an entity affiliated with director Andrew K. McCain, which generated significant revenue for C.I.S.O Global Incorporated in 2024. They also had a convertible note with Hensley and Company that was exchanged for series of preferred stock. These related party transactions need careful monitoring by shareholders. This is a standard proposal to get shareholder approval for their chosen auditors, Semple Markle and Cooper LLP, for the fiscal year ending the 31st of December 2025. They've also provided a breakdown of audit fees, audit-related fees, and tax fees, which seem reasonable for the company's size. This is a big one. They're asking to add 10 million shares to their 2023 equity incentive plan. They say this is crucial for attracting and retaining talent, especially in this competitive market. As of the 7th of November 2025, they only had a handful of shares left to grant. If this fails, they might have to rely more on cash compensation, which could affect their cash flow. The potential dilution from these extra shares is estimated to be around 10% of their fully diluted shares outstanding, which they claim is within market norms. This proposal is tied to a preferred equity purchase agreement with B. Riley Principal Capital Incorporated. They can issue up to $15 million in Series B preferred stock. The catch is that if these shares are converted into common stock, it could result in issuing up to 39 million shares of common stock. This exceeds the 19.99% threshold under NASDAQ listing rules, hence the need for shareholder approval. The company believes this provides a reliable source of capital, but it comes with significant potential dilution. This is the most dramatic proposal. They want to increase the number of authorized common stock shares from 300 million to a massive 1.3 billion. That is a more than threefold increase of the current authorized amount. The justification is to provide flexibility for future financing, equity compensation, strategic transactions, and even a digital asset treasury strategy. While this doesn't immediately dilute anyone, it gives the board a lot of power to issue shares down the line without further shareholder approval being needed for each issuance. This is essentially a fallback proposal. If there aren't enough votes to pass one of the more critical proposals like the stock increase or the equity plan amendment, they want the ability to adjourn the meeting to a later date to try and get those extra votes. It is a common tool to ensure important proposals eventually get passed. This annex shows the proposed amendment to their certificate of incorporation. Specifically, it details the change to Article 4th, Paragraph A, regarding their capital stock. It is formal legal language for that massive stock increase we just discussed. And here we have the proxy card itself. This is what you'll see if you receive one by mail. It shows you how to vote for or against each proposal or to abstain. The board is recommending 4 on all these proposals, which is to be expected. Alright, let's get to the big picture here. C.I.S.O Global Incorporated is in a phase where they are clearly looking to fuel significant growth and possibly a strategic shift. The massive increase in authorized shares, coupled with the approval for more shares under their incentive plan and the deal with B. Riley, signals a strong intent to raise capital and potentially expand through M&A or other strategic initiatives. The biggest takeaway is the sheer scale of the authorized share increase. Moving from 300 million to 1.3 billion shares is a huge jump. While they're banking on future opportunities, this also means a significant potential for dilution for existing shareholders. The board's justification of flexibility is standard, but the magnitude here is notable. It gives them a very wide berth. The reliance on stock options and equity incentives, as shown by the need to replenish the plan, is a common strategy for growth companies to attract talent without immediately draining cash. However, the lack of reported stock awards for top executives in 2024 is a bit of an outlier compared to the need for more shares under the plan. The B. Riley deal is a classic example of a company securing a flexible financing lifeline, but again, the conversion into common stock carries dilutive risks. The transactions with Hensley Beverage Company showing substantial revenue for C.I.S.O Global Incorporated are also interesting. It highlights reliance on specific business relationships. Overall, C.I.S.O Global Incorporated appears to be at a pivotal moment. They are setting themselves up for significant future action with these proposals. Shareholders need to weigh the potential for growth enabled by this new capital and share flexibility against the very real risk of dilution. It is a high-stakes game, and the board is clearly asking for a lot of trust and a lot of shares to play it. So, what is your take on these proposals? Are you for granting the company such vast power over its share structure? Or do you think it is too much risk? Drop your thoughts in the comments below. If you found this breakdown helpful, smash that like button, subscribe for more corporate deep dives, and don't forget to join our Discord community, linked in the description. We're always discussing these filings and more there. Thanks for watching, and we'll catch you in the next one.